Welcome to Bears in Exile. Today is September 14th, and it's time once again for the market overview, looking at the Dow, SPX, VIX, XOY, TNA, UUP, FXE, GLD, and SLV. All right. Well, we had a really cool day today. It was all over the place. Yesterday we said, how boring it was. We didn't have a massive, 100 plus range. Actually, in today's market, more like 200 plus range. And we got that today. Here we are with the Dow. Ended up with a huge Big Daddy spinning top, going all the way to touch the bar, and all the way to almost the lows of yesterday. For the most of the day, we were just running, and it was pretty crazy. Up 275 at one point, closing up 140. But nonetheless, really cool. We do have the short-term moving averages, some of them starting to turn up, which is good. It is an indication that we should be going up for a proper test of the bar. And beyond that, CCI ticking up. Fast stochastic now hooking up underneath the 14-day RSI moving average, and we have reduced the angle on the slow stochastic. So if that one does loop up, great. We were waiting for these to be below the 14-day RSI moving average, have them flip over, join it, and march on up. Although I really kind of think it should have gone a little bit lower, but it is what it is. Uptick on the histogram and uptick on the MACD. Momentum does appear to be shifting back, and it makes complete sense. We have all of those shorts. We've talked about that, and so we're going to see how far they're able to push us. Certainly, at the end of the day, we had a massive drop of 150 points in very short order, which was unfortunate. But if we are starting a very short-term bullish move to retest this previous high, which we believe will happen, to have them come in and push it down at the end of the day is fine, because they are expending energy just to recover some ground. So I don't have a problem with that. 60-minute time period, we had the positive divergence in the histogram and the RSI and all that, and it is working itself off right now. So we do need this to get higher than this previous peak if we're going to avoid, at the moment, if it was to turn back around. We have a higher peak here on the RSI, I'm sorry, on the histogram, and we need this to be correct. So hopefully we'll get another couple of 100 points. We'll make the MACD look proper on the way up, and we won't have any funny business setting up here. But anyway, we will see. SPX ended at 1188. Back when we were at 1160, we said that we would have a immediate target of 25 points roundabout, and that was met today. Actually closed about that area. We did finish below the upper price consensus level. We were above it for part of the day, closed right below it, but that's okay. We closed above the major price consensus level, and all the secondaries are going to be the same, so I won't rehash that. Do we have this bear flag? Are we going to go all the way to the top? I said that I believe that we would get around this area and fail, but if the squeeze turns out to be bigger than expected, and there are lots and lots of bears out there right now still, even after today, and if we're able to exceed this high, this is the devilly area that will probably confuse a lot of people should we get to that point. And certainly momentum and all that kind of thing looks really good on the daily. Daily is our strongest time frame at the moment. We actually did not go over this in the Dow. But here on the 60-minute, you can see that the CCI is very high, stochastic's very high, rolling over. 14-day RSI moving average still marching up, but RSI ticking down, histogram ticking down, and MACD still pointing up. So if we do have some sort of a move down, that's fine. You can see that on the 60-minute time period, we have gone through the long-term moving averages after fighting with them for a couple weeks. So we've broken out from there. And if we go back to test those long-term moving averages and then bounce off, that would be fine. That move down will take care of these secondaries. So I am not really concerned about that, but be aware that that is highly probable that that we'll get a test immediately following the breakthrough of the long-term moving averages. Oh, come on. Alright, that's the second time you'll have heard the phone ring on my videos, and anyways, a little bit funny. So still looking at the 1250 area roundabout at our high, and looking for a failure in the 1220, 1230 area. So anyways, and then again we can just fall apart and go back down, and Greece sinks into the ocean tomorrow, and that's that, but we will see. The VIX, okay, spinning top, which is completely makes sense with the major indexes. Did go down, did touch the long-term moving averages, just like the Dow did on the upside. So this is good. We did close below the major price consensus level, and we are above the lower price consensus level. Notice, however, all our secondaries are marching down, every single one of them. So looking at the short-term moving averages, we can see that we still need a cross of the middle Bollinger Band line. We also do not have complete crossover and separation prior to entering the bar. Do we have enough room for it to actually do that? There isn't very much room. It's going to need some kind of a really nasty move in order to do that, and I don't think that we're going to get it just tomorrow. So more likely that it will come down, sit on the bar, and wear it down. So at least for a few days before it tries to move. But that is my guess. And going on to XOI, spinning top. Short-term moving averages are compressing. We need to get a cross of the middle Bollinger Band line. And secondaries are all pointing up with the exception of this low stochastic. So not too bad. Our daily time period and our 180 time period are the strongest at the moment. Here's the 180, histogram ticking up, MACD ticking up, RSI ticking down, stochastic, slow stochastic ticking up. Getting the hook on the 14-day RSI moving average, very good. Slight downtick on the fast stochastic, and uptick on CCI. So 180 does not look bad at all. And of course this applies for the Dow and the SPX. And looking at TNA, spinning top, story of our lives, and everything ticking up with the exception of the regular RSI, which had a side tick. But we are above the major price consensus level, still have a little room to move before the upper price consensus level, and it is not bad in the daily. 5-minute, 15-minute, 30-minute, not as pretty, but those will work themselves out rather quickly. Okay, now for the fun part. The most important chart of the night, UUP. We closed below the 200-day moving average. We finally got our downtick. Hallelujah. And so, 4 days, we should have a bubble corrective move. With this downtick, we get a target at 2153. Now that is would be a very nice move, would be very positive for the market. You can see we've talked about the wobble, the excessive separation, the ugliness of the short-term moving averages, and everything ticking down with the exception of the MACD, which is not caught up yet, and the 14-day RSI moving average, which is getting high. I mean, it is really close to the area where it should start to roll over. So a few more days with that, and then look out below over the course of a couple of weeks. So, but anyway, 4 days we're going to be looking to see if this downtick resolves itself and we get a bubble corrective move. I hope that we do, and so that does give us some color to all of our spinning tops that we have all over the place. Hopefully Euroland has taken care of itself for span of a week. We'll see. FXE, nice inverse. We have a hammer. We have our uptick. Uptick gives us a target at right at the 200-day moving average. So bubble corrective move here makes complete sense. We'd correct the bubble. We get denied, you would think, at the 200-day moving average. At the very least, it should have some trouble. And with the exception of the 14-day RSI moving average, everything is ticking up. Oh, and the MACD, which is still pointing down, still has to catch up, but still very, very, very nice. GLD, our second VIX, ended with a little miniature hammer. It still does not look bad. Actually, in every time frame except for the daily is the weakest for gold at the moment. You can see that the secondaries, with the exception of the RSI, are all pointing down, and still have a full bullish bar to contend with. We are below the upper price consensus level. We have lots of room to move to the major price consensus level. The middle Bollinger Band is getting above the short-term moving averages, so looking for a move down of some sort, but it really should be short-lived and not that spectacular, because in our other time periods they are in positions where they have room to move up, or are about to move up, or are underway moving up. So not to count out gold by any stretch of the imagination, but that's what it looks like. And our last chart for the night, SLV, also ending with a small hammer, going in for a test of the bar, actually more like sitting on the bar. Middle Bollinger Band above the short-term moving averages. We are below the upper price consensus level. Room to move to the major price consensus level, and with the exception of the RSI, everything ticking down. Actually, we have a slight uptick in the 14-day RSI moving average, but it is extremely minor. So I'm not willing to bet against precious metals at this point, and the dollar is going to be going down. They should be going up. So anyways, we shall see. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.